Welcome to Swing Trading Channel. Today is January 26th, and let's jump into it and see what the market did today. Um, it's actually basically flat. It went up, a few points. I still think we're still in this range of trading. We'll see. This is going to be like a higher low, and the market is going to take off from here. Actually, that's the least likely scenario. Why? Let's look why. Um, the volume is not that great. You see, it's less than the average of the past few months. The MACD is moving lower. The RSI is still moving lower. So it is guilty till proven innocent that it's gonna move sideways. Sooner or later, it is gonna either break down or break up, and we have to see, wait and see. It is not helping that the technology is actually doing worse than the S&P. Um, if we look here, we're going to see it's doing lower highs. That's a higher high. That's a lower high, and that's another lower high, and we have to wait and see. The material, sorry, this is the energy XLE. It's going down. The financial, it's still in a short downtrend. It's still below the 50-day moving average, and I think still even below the 20-day moving average. And would this be a bottom right here? I really doubted that this is a bottom right here, because the financial came out and none of them gave us any good news. So what's going to make it move higher? I just don't see it right now. And I actually went and I bought some put option today on the XLF. I'm not saying it's just going to move, just boom down. I'm not saying that, but it's going to move lower, I think, from here. Excuse me. And it did move higher. Then we're going to change our thesis. But for now, the trend is lower. Also, material is moving sideways. So where is the upward momentum is going to come from? Till now, there is no leaders. You have to have leaders in the market for the market to keep moving higher. Now, I remember in 2014, we started the January the same way. The stock market was moving down, gold was moving up, and everybody thought that's it. But then February came and changed, and in spite of the tapering, in spite of saying we're going to raise interest rate, in spite of the strong dollar, the markets just keep going up. We don't fight the trend. I believe long term, it is going to move down, but this long term can be way away from now. The only thing actually that's moving higher is the biotech. And as I mentioned yesterday, I really do not like to trade biotechs. I traded before and I got hurt, and since then I'm like bruised, and I don't like to trade it. But as of now, this is the range that the biotech is trading in. Another thing that's trading up, biotech, by the way, cannot take the market higher. It just can. The other thing that's also moving higher is interest rates. Interest rate is moving lower, so the TLT is moving higher. It's a good thing, if you are long interest rate, you want to see the interest rate go lower, and this is the chart that's showing that the interest rate is going lower, and it's still nice uptrend for a very long time, since late last year, till it hit, I think the 30-year hit 3% or something like this, and now it's like what, 1.8. So it's 50% move is not bad at all, and it's still moving higher. Now, Apple, as we said yesterday, and I'm gonna try to make the weekend update on Friday or Saturday max. It was very late last night. So let's look here. Apple moved a little bit higher today, so it closed above yesterday close, so it is higher. However, this black candle means that the market close today was lower than the market open today. Volume is not that bad, but it's still in the upper part of this channel. So we have to wait and see. Again, the path of least resistance for Apple is going lower to in this channel. It might come here towards 110 or something, stabilize and then take off. Apple always do that, but for now it is trading sideways. Now, the stock I spoke about yesterday is Skyworks, and we said yesterday, even despite this large move up, it's outside of the Bollinger Band, and it looks strong. It's a momentum trade, and I actually entered this trade today. I entered it late, actually. I entered around 81.50, and it helped. It just kept moving higher. However, with that said, I did not like the volume today, that it is way below yesterday and Friday and Thursday. But you know what? If I took my dollar today profit and sold it at the close, my broker is not gonna say, "Oh no, I'm sorry, I'm just gonna give you 50% less because of your profit because the volume was low." It's still profit is profit. So just be careful that the volume is low. We need to see with momentum stocks like this for the volume to get higher. If it didn't, it can be in trouble. But as of now, even that after 1, 2, 3, 4, 5, 6 days, the stock is moving nicely, closing every day above the upper Bollinger Band, and that's good news. I'm in the stock till it changes direction and start moving lower. I'm not going to give it that much of a stop loss because it's just a momentum. And once the momentum ends, it ends. I don't want to be in it anymore. Gold is moving lower for 2 days in a row now. We said that 1300 is going to be a fight between bears and bulls. And for now, the bears are winning. Not that much winning. It's what? $19 it went down, or 20 something dollars if you're gonna count from this high right here. So it is not it's not that bad. We will see what gold is gonna do. There is a lot of uncertainty in the forex market, and people want to hide in something tangible, so they are going to buy gold. However, it's not helping that the US dollar keeps moving higher. It didn't move that it didn't move higher today. It didn't move that much lower either. Euro stabilized a little bit. We'll see what's going to happen in Greece in the next few days and how this is going to be resolved. But for now, gold is, I think maybe this could be just a flag pattern right here, and is gonna just keep moving higher from here. Who knows? We do not know. It's for now it's moving lower. Just be careful. And we spoke about GDX, and I remember I spoke about it a few days ago, and I said I just wanted to see it going down here, stabilize a little bit, and then start taking off. The good thing about GDX, that it's a minor sector ETF, that even that the gold moved lower today, GDX didn't move lower today. Actually, it opened low and then kept going all the way up the whole day and closed at the high of the day. That's encouraging news. It's almost engulfing pattern here. But however, this uptrend is broken, so it needs to come back above this upper trend and get and keep going for us to be convinced that the bottom is in, and this is something that is going to keep going higher. So what's the trade here? The trade here for me is today low is my line in the sand, and we'll get in very little though, because remember this here, the 50-day or the 200-day moving average, it's not proven that it is like huge resistance, because when is the last time it touched it? Like 6 months ago, and it wasn't that much trading around it. So but people love the 200-day moving average, the 20-day moving average, 50-day, and some people just as soon as it touches it, they sell against it or buy if it's support, whatever they do. They have their own thesis and they do that. So that's why there is a fight here over the 200-day moving average. We'll see. It needs to clear the 200-day moving average and stay above it for either 2 or 3 days for me to be convinced that, okay, it's going to take off from here. And 2262 now is a very important support. So if the trader is patient, it should wait for the 200-day moving average to be cleared, then get in, and then ride it from there. However, if there is an edge, just scratch it a little bit, just very little. The support is right here around maybe 24 or so. I'm sorry, 21. And very little, you know, few shares. And then when it clears the 200, you almost can add to it. Now, we spoke about that another sector that's also doing well is actually the healthcare sector. Healthcare sector is doing very well for a lot of reasons. You know, Obamacare put a lot of people into the market for them, so they are doing well. I remember very well, I think in 2011 when Obamacare passed, everybody was saying this is bad for insurance companies, and actually insurance companies and along with pharmaceutical companies were moving lower. However, once it passed, they took off and they didn't look back since then. So XLV, if you look at chart of XLV, it is actually, it's a nice looking chart. And I wanted to see anything inside XLV that I can get in. You know, they are not, you know, those sexy stocks that you can buy and just move 10% overnight. They are not going to do this. But I hold them for a very long time, and they made me a lot of money. One of them, actually the one I had now is the LLY, and I had it since I think 2012 or late 2011. And it's almost doubled now. So it's stocks that's just slowly but surely move up and up and up in an environment like this. And when the market goes down, they are considered defensive stocks because they pay dividends, so they don't go lower that much. So I think LLY is, I think this was the earning and it gapped up, and then it just, you know, a lot of people are selling the news, and now it's moving higher again. That looks like a higher low for me, and it might move up from here. Just this stock is not a fast moving stock. Yeah, moved here a little bit, but usually, you know, it doesn't move that much. It moves little by little by little. So for something for long term, you might want to take a look at it, and it's a good stock, and it's a good company. That's it for today. Thank you for watching, and have a good evening.